The alarm bells are ringing in Zurich, and the echoes are being felt in every vault from London to New York. We have just received reports of a massive leak involving UBS, the last global banking giant of Switzerland. The numbers being whispered in the halls of the Swiss Financial Markets Supervisory Authority FINMA are staggering: a 5.2 billion-ounce silver liability. If these leaked reports are accurate, UBS has exactly 28 days until February 10th to exit a position that shouldn't even exist. We are looking at a $298 silver endgame, and the banks have officially lost the ability to hide the truth. Today, we pull back the curtain on the Swiss emergency. Why is Switzerland in a state of emergency? On January 12, 2026, UBS officially rejected the Swiss government's new regulatory proposals. The Swiss Bankers Association is in an uproar because the government, still scarred by the 2023 banking crisis, is trying to force UBS to hold an additional $24 billion in capital. The Swiss government wants systemically important banks to fully capitalize their foreign subsidiaries, a requirement that currently sits at only 60%. Why the sudden rush? Because the regulators see the silver gap. They know that UBS's foreign subsidiaries are exposed to a metal that is currently in a permanent structural deficit. UBS strategists are publicly predicting silver to hit $100 this year, but their internal black box models show a total systemic failure if the price breaks through that ceiling. Let's look at the math that is breaking the bank. The leaked reports suggest a total silver short position bet against the price totaling 5.2 billion ounces. To put that in perspective, the entire world only produces about 830 million ounces of silver per year. This position represents over 6 years of global mining production. It is a physical impossibility to cover. For decades, these paper ounces were used to keep the price suppressed. But now, with silver breaching $84 and the US Treasury calling for emergency G7 meetings to secure supply, the paper game is over. UBS isn't just fighting a market, they are fighting the laws of physics. The leak points to a specific date, February 10, 2026. This is the deadline for UBS to realign its precious metals risk profile to meet the new Swiss capital requirements. They have 28 days to buy back what they sold. But here is the problem: there is no silver to buy. Commercial stocks at the COMEX and LBMA are at multi-decade lows. China has already implemented strict export licensing as of January 1st, cutting off the flow of physical metal to the West. The G7 is currently discussing price floors to secure their own military and AI needs. UBS is trapped in a burning building, and the G7 nations are the ones who locked the doors. Where does the $298 target come from? It's what experts call the convergence price. When you take the total amount of paper silver contracts and try to squeeze them into the available physical supply, the price discovery resets. Analysts are now looking at the gold-to-silver ratio, which historically dropped to 15:1 during periods of true monetary crisis. With gold currently targeting $5,000 per ounce, a return to that ratio puts silver at $333. The UBS internal endgame model reportedly uses $298 as the threshold, where the entire fiat currency system must be repegged to hard assets to avoid a total wipeout. This isn't a rally, it's a revaluation of reality. We are 28 days away from a potential systemic reset. The leak from Switzerland confirms that the biggest banks in the world are short the one asset that the modern world cannot live without. From AI server farms to G7 defense technologies, the world needs silver, and the banks simply do not have it. If you are holding paper silver, you are holding a promise from a bank that is currently fighting the Swiss government for its very survival. If you are holding physical silver, you are holding the only shield against the coming February 10th shockwave. The $298 silver endgame is no longer a Super Bowl theory. It is a mathematical necessity for the banks to exit their traps. Watch the Swiss markets, watch the G7 rule changes. And most importantly, watch your own wealth. Subscribe to Survival Economics for daily updates as we track the final 28 days of the UBS crisis. Stay vigilant, stay in the physical. I will see you in the next report.